Mark, I mean, listen, the NASDAQ's been the power player in this market for years now. Yesterday spooked some folks. Today, the NASDAQ futures are actually down more on a number basis than the Dow futures. Are you getting nervous about tech?
I am getting a little bit nervous about tech. I think one of the reasons you see the market selling off a little bit right now is there's definitely some escalating tensions with China, and I don't think that's going to go away anytime soon. We could see flare-ups for the next decade. So next week is a huge week for big tech, some of these big momentum names that have really carried the market over the last several years. You got Facebook, Amazon, Apple, Google. They all report next week. And so far, the track record for these big momentum names has not been that great. I mean, they haven't done well lately. You look at Netflix. They had a decent quarter. The stock tanked. Microsoft beat 2 days ago and dragged the market down yesterday. So it seems like a lot of these high momentum, beloved tech stocks, it seems like they're kind of running on fumes right now.
Yeah, well, you know, the end of big tech's big run, Mark, has been called and failed many times in the past. Is there anything right now that implies to you or that you're looking at technically, fundamentally, that maybe this time it is time to take some profits?
I wouldn't say this is the end of big tech, okay? But I just think it's come so far. I mean, when you look at the relative performance this year, the market's up about 1%, Microsoft's up 29%, Apple's up 27%, Amazon 61%, Facebook, Google 13%. They have been crushing the market, but all of a sudden things have changed. So from July 1st on, the S&P 500 is outperforming all of these names except for Google. So, look, I'm not saying you need to bail on big tech, but look, big tech has helped all of our portfolios quite a bit. It's probably time to just be smart, be prudent, and look to trim these positions.
And then do what? Put the money, I'm assuming, not in the sock drawer, maybe in gold. We talked about that earlier. What looks good to you, Mark?
So, yeah, I do like gold. I think you should definitely have a small allocation of your portfolio that's going towards gold. But look at some of the average stocks lately have been outperforming these big names. And the average stocks have been outperforming the cap-weighted stock market as well. So you take a look at a company like Twitter. I mean, it seems like every other week there's some bad news coming out about Twitter. Whether it's the companies getting hacked or they're censoring tweets, whatever it is, that typically causes a pullback, which gives you an opportunity to get into Twitter at a decent price. So we've been in and out of that stock for a while, got back in when it was about 29 bucks, maybe a month and a half ago. And it's doing very well. There's going to be high engagement on that Twitter platform all the way through the election. They just saw monetizable daily average users grow faster than ever. So you look for companies like that and you buy them on the pullback.